Hello, everyone. Andrew here. I'm going to talk to you today about a popular phrase people keep saying. You're hearing it from real estate agents and from mortgage brokers. They're saying, date the rate and marry the house. And I'm going to explain that to you and why, in my opinion, even though I'm a real estate agent, I think this is a really lousy idea. And I'll tell you why. But before that, if it's your first time here, please subscribe so you can see what else we have on our channel here. I've got a lot of really good useful information about the housing market because the housing market is literally changing daily. These interest rates are going up and down. We don't know where they're going to land. It's changing daily. So subscribe to the channel so you can see some of the other things that I've talked about. Also, if you like this video, do me a big favor and smash that like button. And if you'd comment down below and tell me what you'd like to see some videos on, I'd be glad to see or do any videos that you'd like to hear. Like I'd mentioned, I'm a real estate agent. I've had my real estate license for over 10 years now, and I'm an expert in real estate, so I can talk to you anything real estate related. Let me know what you want to hear. But I'm going to talk to you right now today about this again: date the rate and marry the house. And what people are saying with that is go ahead and pay the higher interest rate net right now and then refinance that house in a couple of years when the mortgage rates come back down. And it's a way to get people to still go ahead and buy with this false illusion that these interest rates are going to come back down to maybe what they were a couple of years ago. Now, remember, when we were at that 2.75%, that was historic low, and we never should have even gotten to that rate. That rate should never have existed. And so those rates, unfortunately, are not coming back. We might come down a little bit on the rates, but it's really so hard to predict what they're going to be at. Just for comparison's sakes, it's quite interesting because it's all over the board when people think these interest rates may reach their peak and when they might start coming down. We've actually seen a little dip the last couple of weeks in interest rates coming down, and that's not because the Federal Reserve has changed any of their policies at all, but it's natural for this time of year for the demand for mortgages to come down over the winter months. The demand for mortgages always come down, so your interest rates are dipping in that a little bit naturally. That's all that is. They're going to go back up when the selling season hits again in the spring and into next summer. But I'm going to go for an example. I looked up what the predictions were in 2021, what they predicted the real estate rates or mortgage rates would be for 2022. And I was able to find, it's kind of funny because you really got to dig pretty deep because they don't really want you to see this information because they don't want you to know that you were wrong. But I was able to find an article on as a website called NewsRes, and it had the predictions from 2021. This was actually, or from 2021 for 2022. And at that time, the National Associations of Realtors, like I've mentioned in the past, I'm a member of the National Association of Realtors, but they predicted that by the end of 2022, we would probably see with the Fed starting to raise their base rate, that we would probably see about a 3.5% mortgage rate by the end of 2022. And as I say, that didn't age very well. Freddie Mac was actually thinking that the interest rate would be at mortgage rate would be at 3.6%. And the Mortgage Broker Association, they predicted the interest rate by the end of 2022 would be at 4%. Now we've actually hit well over 7%. And again, that little dip that I'd mentioned, we're right at around 6.7, 6.8 right now. Keep in mind too, that is kind of an average, and that's actually by having good credit. If you don't have good credit, you're already paying considerably more than that 7%. So when they talk about this, date the rate, but marry the house, it's a catchphrase everybody's using right now. And again, I think it's a really lousy idea because two things are going to happen. One, we don't know when these rates are coming back down or if they're coming back down. What the Federal Reserve has done so far has made just a very minimal impact on inflation. And their goal is to get the inflation rate at 2%. So while they're going to maybe slow down how much they're increasing their rate, they're not going to stop increasing that. So interest rates are going to continue to go up before they go up. And even then, they're going to level off and they're not going to start coming back down because it's a simple fact. The banks make a lot more money when your interest rate is higher. So they're not going to start easing off on those interest rates. They're going to go as long as they can, charging you that higher interest rate. So that's the first part about it, is we don't know when or if mortgage rates are going to come back down. The same people that predicted that they'd only be at 3.5 to 4% by the end of the year, they're predicting that interest rates are probably going to come down to that 4.5 to 5%. And I don't know where they're really getting that from because I don't myself see inflation easing off. But the other part of this, part two of this, is what people don't understand. When you're refinancing, you can't refinance your loan when you're what they call underwater, meaning that you owe more for the house than the house is worth. And unfortunately, right now, homes still are priced higher than they have been. We're at historic highs for the high prices of homes right now. And most, again, experts are predicting, and I kind of see this coming happening, that house values are going to probably go down by up to 20%, especially if you were in a market where the prices really skyrocketed and they're still at those highs. They're not coming down yet. So I'm just going to give an example. If you buy a house for $300,000, and unfortunately, the market corrects itself and does about a 20% correction, your house is now only going to be worth $240,000. So even if the interest rate comes back down to that 4.5, 5%, you're not going to be able to refinance the house because you can't refinance a house that's what they call underwater. A bank's not going to lend or redo a mortgage, refinance a house on a house that's what they call underwater. Because basically, what you're doing when you're refinancing is you're taking out a new mortgage and the previous mortgage is being paid off, and then you're getting a lower rate on your new mortgage than what you when you'd got that 7% mortgage rate. But again, if home values come down the 20% that most experts believe that they will, that right now they're really 20% overvalued, if those come down, you're not going to be able to refinance that. And unfortunately, lenders and other real estate agents are not telling you that. And I don't know that it's intentional that they're not telling you that. I think it's a little bit more, unfortunately, I think it's a little bit naive and maybe even a little bit of ignorance that they don't realize that, again, you're not going to be able to finance a home that's underwater. And when these prices come down, when the natural correction happens, these prices are going to be underwater. So I hope that helps you a little bit. Like I said, this whole date the rate, marry the house. I disagree with it. I think it's a terrible thing to do. I think you need to be working with a competent real estate agent that can tell you what they feel the value is going to be in a couple of years based on the particular market and how much your market went up. For example, the market that I'm in, our prices have gone up, but they haven't gone up significantly the way they have done in some other markets. So I don't see that we're going to have as big of a correction here. I'm hoping that we're not going to have as big of a correction here. But I also don't believe that these interest rates are going to be coming down soon. The same people that predicted they weren't going to get above 3.5% also are the ones that are predicting they're going to come back down. So, hey, if you like what you saw, thanks for watching. Comment and subscribe, and we'll talk to you later. Thank you.